Right on time this time.
Right on time. How are you?
Very busy, man.
Very
Jeez.
busy. Yeah, I feel you. Pretty busy too. I'm in
Whew.
Arizona, and
Yeah.
I did a site visit to Intrepid yesterday, and I feel like I got hit by a baseball bat this morning.
Was nice and warm in Phoenix, Arizona.
Yeah, it is nice weather. That's the consolation prize.
Hmm.
A lot to talk about today. Thank you for joining me here. Where would you like to start? I definitely want to talk about gold and silver. I want to talk about the Middle East. Um, I want to talk about what we're seeing in the copper market. You can pick a spot.
Well, I would like to go back to our last chat. And I think our last chat was about the despair among commodity investors.
Mm.
And well, I remember saying that, this is the last time gold is retracing, going sub 2000, and then the next move, we might be able to finally leave this strong resistance around 2050, 2100 behind us, and then we'll see a rapid rise towards 2300. And it's only a few weeks later, a few months later, and we're there. So lots has changed, and the whole sentiment is turning now. But it's still very early days, so we don't see huge volumes yet. I think you are seeing the same. So the excitement still has to start. But March was our first double-digit return month in 3 years, and when we have a recovery in commodity markets, we always have this string of double-digit return months. In 2020, we had 5 back-to-back. In 2016, we had 6 within 7 months. After the Lehman crash, we had 7 double-digit return months in 14 months. So I think this is the first of a string of very positive returns.
Yeah, you're absolutely right. The last time we spoke, I think gold was around 2000.
Yeah.
And so it's moved up 20% since that time. And really, the move since the end of March is where most of those gains have occurred. We saw 2160 on March 25th, and we hit 2448 just last Friday, trading 2396 right now. And I think gold's going to cool off for at least another week, but I'm definitely not bearish, and I'm becoming increasingly bullish by the hour as it continues to consolidate around 2400. So it got very overbought last Friday morning, as the Iran thing
But
was.
that's over now.
It's over, yeah. Yeah, so tell me what you think about Iran and the Israelis, and there's a tit for tat, there's a lot of words, a lot of rhetoric. What do you think the long term, the long term, sort of implications are for financial markets, or are there any?
Well, as you might know, I tweeted when we were all awaiting the first rockets to hit Israel that my gut feeling was telling me this wasn't the start of World War III. And fortunately, everything calmed down a bit in the last few days. But actually, we are in a World War III type of scenario, but this will be an all different confrontation compared to World War II and World War One. So this much more hybrid situation where the Western Bloc, so the US and France, with a dollar-centered financial system, is on a collision course with actually the rest of the world. But that's in general, but more in particular with the BRICS Plus. And the BRICS Plus, the BRICS Club, is growing very fast. And if you count how many people live in the Western Bloc, so Europe, the US, Canada, Japan. It's 1.5 billion people. If you count how many people live in the BRICS-oriented bloc, that's 4, 5, 6 billion people. And this is the real war, which is just heating up. And you follow the same topic as well. And we all know that this BRICS club is working to have their own trading system, their own financial system. So we're back at some kind of Cold War situation where we have spots of hot war. So the war in Ukraine and the conflict in Gaza and the conflict with Iran are all part of this huge, almost worldwide, confrontation in which the Western powers are quickly losing power and can't accept that, and the BRICS are getting stronger and stronger. That's my take.
The BRICS are getting stronger and stronger. It seems to me that we have an increasing number of hotspots around the world where a miscalculation could easily take place. One is the South China Sea. One is, Ukraine and Russia. One, obviously is Iran and the Israelis and their tit for tat, and strong words, and we're going to bomb your nukes. We know where they are. And maybe there's even more that I'm not even saying. And the more there are, and the more strong words and actions are thrown out, the more likely there is to be a miscalculation. Were you surprised at all by how calm the market was in response to that Iranian attack on Monday morning?
No, because I refer to my tweets that this isn't feeling like the start of World War III. And the market has been understanding that it is part of this larger conflict, which has been around for the last 5 years, actually, that more and more countries are not willing to accept the US dollar system any longer and are openly opposing it. And there was this, during my presentations, I always show this this clip of a news article from 2015, 9 years ago. And I've been using it for 9 years now. And the text of this story, which appeared on a Russian news site in 2015, was that Moscow and Beijing are seeking a reconstruction of the current world order together. That was 2015. I updated and revised the Big Reset, which can be downloaded for free at our website. And I added a full chapter around the Russian and Chinese cooperation to confront the West and to use gold, because gold is the anti-dollar, to make sure that the US was no longer willing to print unlimited amounts of treasuries and sell them to Russia and China. So these foreign countries have stopped buying treasuries since 2014. And they know, Russia and China, they know time is on their side. And they're joined by South Africa and Brazil and the Arab Emirates and the Saudis now. And the Saudis are selling their oil in other currencies than the dollar. So that's the end of the petrodollar deal. And they know time is on their side. And the US is adding 1 trillion to their national debt, being 34 trillion now. They're adding 1 trillion every 100 days. So They can just wait, sit and wait.
Yeah, fair points. And it stands out to me. I just thought of this. The only real allies of the U.S. are people that the U.S. pays and gives free weapons to. I just think about the Iranian attack on Saturday night. That cost the American taxpayers over $1
Yeah,
billion
sure.
to get in the way of that. And what do we receive for that? I mean, obviously, look, it's the right thing to do. We don't want, World War III, but still, somebody's got to pay for it. And these rebels in Yemen, they have very limited capabilities, but they're tying up 4 warships over there that's costing the taxpayers $250-300 million every week. And then when we think about the debt, the 1 trillion uh, in payments just to service the debt every year that's growing
Yeah.
every moment that we speak. Obviously, it's unsustainable. It's unsustainable. And the more that China and Russia sort of get off the dollar and get other countries to get off the dollar as well, the less likely this is to last. And the time, becomes shorter and shorter.
But we always knew, Robert, and that was why the undertitle of the big reset is the war on gold and the financial end game. We always knew that during the end game, at one point, countries and central bank would start to flee towards gold because they know that's a hedge. That's the only real hedge on the current dollar system. And what have we seen in the last few years? Increasing demand from central banks for physical gold. And there's a big whale out there now buying up gold. And we don't know who it is. Some people say it's Iran, some people say it's China. But when you accept that we have this huge confrontation between the Western bloc centered around the dollar, and we have the rest of the world getting more and more centered around gold and other hard assets. Remember what Zoltan Pozsar of Credit Suisse wrote about this. This is the start of a new monetary system. This is the start of Bretton Woods 3. It's a monetary system coming from the East, centered around gold and other commodities. So when gold starts to rise quickly, and nobody understands why, we have to conclude that gold is being weaponized in the same way dollar was weaponized by the US, and gold is being weaponized now by the, well, let's say enemies of the US. But if we talk enemies of the US, there are 140 countries out there, 140, who are not joining US sanctions against Russia. That doesn't mean these countries are all friends with Putin, but these countries are fed up with the Western hypocrisy and the double standards. There were no sanctions on the US when they invaded Iraq. There were no sanctions on the US when they invaded Afghanistan. There were no sanctions on Israel when they killed 30,000 people. So more and more people understand this and no longer accept that the US is world's policeman. And I think some of them are starting to turn towards gold and are weaponizing gold.
So, in your assessment, you kind of just said it, you implied it. Do you think that China has been the largest buyer of gold so far, this year, and really is the driver of the $400 an ounce rally?
No, I don't think so. China is playing the long game. China has been accumulating gold. I've been in the gold business. I've been a gold investor since 2002. But I've been in the physical gold business since 2008. Actually, I started Amsterdam Gold. We had the first private vault in the Netherlands. I sold it in 2011. But when I started Amsterdam Gold in 2008, I was looking at the demand, the physical demand, and the physical gold holdings of China. And I was shocked to find out they were so small. And I couldn't understand why a large country like China had so little physical gold holdings. And then Lehman arrived, and then it all changed. And they started to accumulate gold in a massive way. They've been doing that for the last 15 years. Russia has done the same. And now even European countries like Poland and Czechia are adding to their gold reserves 10x. They're growing their gold reserves 10x now. So there are so many buyers in this market, and I wouldn't be surprised when a country like Iran is now the aggressive buyer on the market. China is not looking for war with the US, so they play it in a very well. If you study the behavior of China, then you can conclude that they are planning this, and it's a waiting game. It's a long game. They're not looking for war with the US. So I think they're still cooperating with the US. And the fact that Mrs. Yellen has been traveling to China 2 times now in just a few months, and the fact that JP Morgan executives travel to Shanghai to have discussions with the Shanghai Gold Exchange, that's telling me there are discussions between the US and China how to move to the next level of this monetary system. And the so-called monetary reset is getting closer day by day.
Yeah, did you see the Fed chairman spoke with the governor of the People's Bank of China? So you have Yellen and Powell both in close contact with key officials in China. That's definitely sending us a signal. I think you might be implying they're working on something.
Sure.
Let's talk about gold for a little bit longer. 2,000 to 2,400. Like if you told me 4 months ago the Fed is not going to cut rates at all in 2024. The Fed's just going to stand pat. The economy is going to stay strong in the U.S. I would say, well, gold might go up, but it's probably not going to go up a lot. So I would have been wrong if you asked me 4 months ago on the drivers of gold. I was right on the price and the timing of the price, but I was totally wrong on the catalyst, and that's often how things go in markets. What's driving gold, and why is it holding up at 2,400 when the Fed is saying we might even need to hike if inflation stays sticky?
Well, of course, many forces are influencing the price of gold. And it's not only about interest rates. I think it's more the geopolitical situation, like I just explained. And when I was at PDAC in Toronto in March, I can't remember if you were present there, the mood among gold companies and exporters was still very negative. And it always surprises me that people who are full-time working in this business still don't understand how gold is being used from this geopolitical point of view. And so many people are often surprised when a move like this happens. But you're also aware, Robert, that if you looked at the technical picture, it was clear that the gold was on the verge of a breakout. And we discussed this in our last chat. And the only question was when would the rally start and what would be the reason for this rally. And we still don't know. But the technical picture was so strong. The technical analysis of the gold chart was so convincing that this wasn't a surprise to us. And of course, investors always want to understand why something is happening. But sometimes you just have to enjoy the ride, understand what major forces are supporting gold, and then I don't have to understand the day-to-day price movements. Just sit back and relax. I have a chart. I can send it to you showing gold is still trending in this parabolic move, which started in the 1970s. And there's a reason why, because the national debt and the money printing is going parabolic as well. So gold, like Bitcoin, can reach infinite numbers, just like what happened in the 1920s in Germany. So gold is the anti-dollar. The dollar's being printed like hell, and this won't stop in the not too distant future.
Yeah, this appears to be a structural bull market in gold, which is way more
Yeah,
powerful than one that is just a cycle, a 4 or 5 month
yeah,
cycle. That this is structural, and the divergence from Treasury yields is the strong evidence of the fact that it's a structural bull. And your points are well taken about the technical structure of the long term gold chart and just how bullish it is. I mean, quite frankly, it's the most bullish chart in the world, I think.
sure. And we all know, the real stress in the financial system, the real breakdown of the treasury market, it still has to start. It's all stable out there. Look at the VIX. Look at, you know, markets are setting records. Well, they seem to be topping out a bit now. So the crisis, it still has to unfold. So this bull market for gold will take years to play out. And I think I'm an avid reader of A.V. Gilbert's technical analysis, Elliott wave analysis, and he published this piece 1 or 2 years ago with his long-term targets for gold. And he's predicting the commodity and bull market will continue up to 2050, according to his model. His target for silver is $1,000. His target for gold is $25,000. His target for the HUI, the gold miners index, is 10,000. We're at 260. So, and I agree with him that we're in the very first inning of a structural commodity market and precious metals market. And I can send you another graph. Gold has been underperforming general equities since 1980. Commodities have been underperforming general equities for the last 45 years. And I think this is all changing now, because we talk about gold a lot in this interview, in this chat. But look at other commodities. There will be shortages everywhere. We're a commodity fund. We do our supply and demand studies. Look at uranium, copper. Goldman Sachs came out with a report on copper. This is the time copper will do very well, because there are shortages. There's a copper symposium now in Chile, and people are warning that there's physical copper deficits developing. So it's the whole spectrum.
Yeah, let's transition. Let's talk about copper. So copper is 4.44 a pound now. It's having a fantastic year. I stood there in Vancouver in January when it was 3.75, and I said, "This is a surreal moment in time that copper's at 3.75 a pound with what's coming." So far, that looks to be pretty good. That's a good call. How does an investor profit from copper? When
It,
I could get these 100-pound copper plates and put them in my house. Is that how I should play it? Stockpile copper? How does an
Well,
investor profit from a rising copper price?
for us, it's quite simple. We are a UCITS, highly regulated investment fund. So we can't buy the physical metal. You could do that as a private investor. But we can buy the COPX ETF. That's just a copper basket, a basket of the major copper listed copper companies worldwide. So we build a position in the COPX. And then you don't have to spend all your time and energy researching all these individual companies. And then you think you found the best, and then they close down one of their major mines, which happened with First Quantum. And then you go down 60, 70%. And we don't like these kind of risks. So we prefer to buy the basket, and a rising tide will lift all boats. So you'll do well with an ETF like that.
You know, I think Goldman said $7 a pound by the end of next year. What do you think is the price level on copper that will cause the copper juniors to really soar, for investors to say, hold on, we really need to get into this trade, so they just throw the money at anything with copper in the name?
I don't have an exact price level, but it will be the next phase. So the first phase in every recovery, so that's the one in the Elliott wave count, is always a small move. And then you get to two, that's a correction on the first move up. And then you get the three, then you get the major move. Gold is in the major move now. And then people start to pay attention, and they start to discuss this in interviews like this. And the mainstream media is starting to notice it as well. And then you get some generalist money starting to flow into the space. And it's still very early days in gold, but in copper, who of your friends are talking copper in a bar like they discuss Bitcoin? Nobody's buying copper, only guys like us, the mining nerds, are looking at this. And I think if you look at Goldman Sachs, what they said at this conference, this copper conference this week, I'm reading here, I'm quoting the Bloomberg headline: Goldman sees a very significant refined copper deficit for 24. And that deficit probably will be higher in 25 because Cobre Panama, which needed to close down after these woke demonstrations in Panama, won't reopen for the foreseeable future. Even when there's a new president elected in May this year, it will take a lot of time to change that situation. And Cobre Panama was responsible for 1.5% of all worldwide copper production. It just fell off the market. Look at Codelco. Codelco is the state copper producer in Chile. Their production is falling off a cliff.
Yeah, because it's the nature of the ore bodies. They get into the
Yeah,
lower grade
sure.
ore, and
Depletion.
they need to reinvest, make new discoveries. I saw a statistic. I can't find it right now, but I think it said to balance the global copper market in the next decade will require 150 billion of new investment minimum.
Yeah.
Where is
We
that
need
investment going to
yeah.
come from?
We need to find a new Escondida every 15 months. That's what the CEO of Rio Tinto said years ago. We're finding one new Escondida every decade. We're hopeful that Hercules Silver is just at the start of finding a new copper district. They could be finding a new Escondida or Bingham Canyon. But even when Hercules Silver can prove they found one of these big systems, and the fact that Barrick entered that story within weeks, that never has happened for the last 20 years. I've been watching this market, but even if they find a new Bingham Canyon, we can be sure that won't be in production before 2040, 2038.
Yeah.
Yeah.
Yeah, I mean, you can be sure from a new discovery to being a fully permitted mine in operation, it's minimum 10 years, and that's the optimistic timeline.
But if it's a giga mine, if it's a very large project, it will take 15 or 20 years. And look at Pebble, that has been found 30 years ago. It will never be developed, not for
No,
technical reasons, but for, well, environmental reasons.
right. Let's talk a bit about, Hercules big dot V. I saw you say not too long ago that Hercules is your largest holding in the CD fund. What did you think of the IP that they announced last week? What did you make of it, and why is it your largest holding?
Um, Chris Paul, the CEO of Hercules, you had him on the show last week. Great interview. And um, if you listen to him correctly, and if you study what he has been sending out, especially about this new IP study, the one fact missing is the whole IP anomaly. There are wonderful graphs in his press release, but not one of them is showing the full IP anomaly. And we just had an update call with him just today, and he explained again that he is withholding some of that information because he's not done staking yet, and he's not sure yet he will get all the land they have staked. So the larger picture for Hercules Silver is even better than he could show in the press release of 10 days ago. And he will start drilling very soon. And Barrick will make sure that this season will show um, to the market how large this system um, will be. And of course, it's a complicated system. It's a very large system. I know you studied this quite a bit. And if you connect all the dots, and the first dots were already discovered in the 1880s, if you connect all the dots, I can understand why Barry came in that early.
Yeah, I agree. So yeah, it's now
And
my.
I even heard that one of the Barry guys, after they checked it all and toured it all, shouted, "Guys, where's the champagne?"
That's always dangerous in this business. You don't want to be too optimistic. But
No,
yeah,
but
it's my
when a
largest holding.
Barrick Geo,
Yeah,
these guys are conservative.
yeah.
They're not the junior promoters. When they say something like that, Chris Paul was invited to a Barrick party at PDEC, and all the top guys came to shake his hand. Well, tells you something.
Yeah, it does. Yeah, I'm terribly optimistic. I'm biased. I have a lot of shares too. So we're both biased. We're both sort of talking our books here. So
Yeah,
full
but we studied
disclosure.
it. We spent a
Yeah.
lot of hours researching this, and
Yeah, I spent.
I've learned that can make a difference.
Yeah, no, absolutely. Yeah, I agree with everything you said. And I'm also very optimistic and very excited for the start of drilling there. Um, I like Belmont shows up as the best target, but I've said it on my Substack, and I think I've said it on co.ca. I like stepping out to the northwest of 2305 and then going towards the Great Creek
Mm.
target area. I think that's very, very promising, but we'll see, and really the proof will be in the pudding. What are your thoughts on the other plays in the area? We have like this Nev Gold and the what's the other one, the Bay Horse one. there's a few others that I won't mention, but a lot
Yeah,
of players in this area. Have you looked at any of them?
yeah, yeah. We looked at all of them, and when there's a major discovery, there always area plays. But what I learned from being in this business for over 20 years, stick with the real thing. Look what happened when I was first attracted to Ivanhoe. That was at Mining and Daba in 2014 or 2015. Ivanhoe was valued, as Ivanhoe is the company of Robert Friedland. They were working on 3 projects in Africa, a copper project in the DRC, and a platinum project and a zinc project. They were valued at $250 million. It's a 24 billion company now. I was stupid enough not to have 1% of Ivanhoe mines and keep it for the last 10 years. If I would have stuck with that strategy, my 1% would have been 250 million now. So in Hercules, we own like almost 3% of all shares. And we'll make sure, and that's our strategy, to have at least 1% in all the top 40, 50, well, tier 1 discoveries worldwide, metal agnostic.
What's the largest that you'll ever make one stock as a part of your portfolio? Will you ever make something 10% or 5?
We're not, we're a UCITS fund, so that's highly regulated. So we're not allowed to grow one position over 10%. It would be illegal. We would be breaking the law. So we have an understanding with the Dutch regulators. We can keep buying up to 5%. We can grow the position without adding to 7.5%. But when we reach 7.5%, we need to start selling, because if you have a takeover bid with a huge premium, you could be at a halted market, and when it reopens, you're well over 10%, and then we would be breaking the laws, Dutch laws.
I see. That's very interesting. I didn't know that. Another one that we've talked about before is Bay at Storm Copper.
Yeah, that's intriguing.
You were very positive on this last year. It had a
Yeah.
bit of a roller coaster ride. What are your thoughts on Bay, heading into this season?
Well, when you know that copper will be in high demand for the next decades, when you know there's a huge copper deficit coming, and when you know in Arctic Canada there's a copper system which runs for tens of kilometers, when you know you can do open pit mining, you can do direct shipping, the high grade core is just to be found on surface. And you can buy in this situation in a company which is valued, 20, 30, 40 million. That's a great risk reward strategy, longer term. Short term, anything can happen, but longer term. So we own a few percent of American West, who is the operator. They are Australian listed. And we own also a few percent of Aston Bay, which has a free carry. And for me, this is a no-brainer.
Yeah,
It's a unique project. Where can you find this? I can't.
No, I know. I mean, that's why I got all hot over it too last August, because it is 1 in a million project. But obviously, it takes a long time. It takes a long time to figure these things out.
Sorry, Robert, but as a private investor, you invest your own money. You always have to ask yourself, shouldn't I put it in a place which gives me better returns? And as a fund manager, we need to do the same. But as a fund manager, we have over 130 million Canadian AUM, assets under management. You can put some of your money in long-term place. You don't have to chase the hypes and the high rollers with all of your money, and that makes life as an investor much easier. I can spread our money. I need to spread our money over 50, 60, 70, 80 different places. And as a private investor, that's almost impossible.
Oh, it is impossible, and if you do it, it's not advisable.
No. But we have a large team. We have a team of 4 different researchers, so you can assign certain groups of company with every researcher, and then you stay on top of the story, and you can do the financings and trade around your position, and that's very fortunate, especially in this new developing bull market.
I wanna open the floor to maybe a question or two from the audience, but I want to ask you a question that I wanted to ask earlier, but we kind of went off on another tangent. Um, we talked about gold for the first 20 minutes, and it's very bullish. We agree on that. You can pull up a handful of the big gold mining stock charts. Most of them are breaking out. Most of them are hitting 52-week highs. A couple of the big ones like Newmont and Barrick are still holding back a little bit due to their scale problems. But it really strikes me, especially being on the socials with a fairly large following, the amount of hate that these stocks continue to receive, and how the consensus is the gold mining sector is dead and done and dusted, and forget about it. Have you ever seen such a surreal moment in time when you have gold, the metal, the most bullish chart in the entire world, making all-time highs, yet the companies, the mining companies that make the metal, that pull it out of the ground, are the most hated sector of the stock market?
Yeah, during presentations, I sometimes um, explain it as, if everybody wants to have golden eggs, I want to own the chicken who can lay the golden eggs. Well, who are the chicken who can lay the golden eggs? These are the gold miners. And especially the explorers who are not mining it. I don't like gold miners, actually. We don't invest that much in gold miners. Why? Because at the end of the day, at the end of the year, they own less ounces than at the start of the year. I want to own companies. I want to invest in companies who at the end of the year have more ounces in the ground than at the start of the year. So if I invest in Aya Silver, I know at the end of the year there's much more silver there in Morocco on their land than at the start of the year. And this is an investor dream, it's truly once in a lifetime. Commodities are still near the bottom, undervaluation. And the largest undervaluation we've seen in 120 years, the graph as well. Commodities compared to the Dow Jones, largest undervaluation in 120 years. And that's right at the start of the perfect storm for commodities. Why a perfect storm? Shortages happening everywhere. You can't change this. Demand will grow, production can't grow fast enough, so production deficits guaranteed. Then you have gold and commodities becoming weaponized by the BRICS. So prices will go up. We'll see bifurcation of the prices. Then you have the debasement of currency and people start fleeing to hard assets. Well, what are the best hard assets? Diamonds, gold, commodities. And then you have the inflation picking up. We reach the end of 40-year downturn of interest rates and inflation. This is another break of a 40-year cycle. So that's a perfect storm. And to be fortunate enough to be a fund manager of a commodity discovery fund, a resource fund, at the bottom of the market, having over 100 million assets under management, I feel like a very lucky guy.
You are a lucky man. You are a very lucky man. Um, let's take a question from the audience. If you have a question for Wim, please raise your hand and I'll call on you. Let's keep the questions concise and on topic, something we've talked about or something that would pertain to the topic of this conversation today. I'll throw one more at you. We talked, about Aston Bay and Hercules. Is there any other company, like maybe I'm like, I don't even know you own it or follow it? Is there anything that stands out to you as being really intriguing right now in your portfolio?
Yeah. Oh, yeah. There's so many, not new discovery stories, but there's so many almost legacy positions we have in our portfolio. Look at the size of the discovery, the copper gold discovery by Solgold in Ecuador. I know it's Ecuador, which can be tough, but it's the largest undeveloped copper gold project owned by a junior. The market cap of this company was under 300 million a few weeks ago, under 300 million. This project should be worth 3 billion. If you look at Tinka Resources, huge silver, tin, zinc discovery in Peru. I know it's Peru. You can have problems there, can be a bit of a pain. But two Latin American producers have bought into Tinka. They own 15 or 19%. They both mention Ayavilca, Tinka's project, on their PowerPoint presentation as a future project. So you're sure it will be bought out. And there might even be a bidding war. And you can buy Tinka now. I think it's valued at 60, 70 million. Look at Greatland Gold in Australia. One of the best discoveries, also a copper gold discovery, next to the Telfer mine. What happened to the Telfer mine? Newcrest was bought by Newmont, and Newmont said, we want to sell the Telfer mine. Nobody knows who will get it. Probably will be bought by Greatland Gold. Then you have a new company there who has an old mine and a new mine, and you can buy it for, what is it, 300 million now. So many great examples of the undervaluation, and all these stocks will move up in the next 5 years at least 100%. I would like to bet on that.
The Gladiator, I saw you asked to speak and then you vanished. If you'd like to ask a question, try again. Willem, what about Solgold? I don't follow the company, but I've heard so much about it over the years. Why has a transaction not taken place there?
We know, because this has been officially mentioned by officials in Ecuador, that the Chinese have been discussing a deal regarding Solaris, which has another copper discovery in Ecuador, and Solgold. So we know the Chinese are working on it. We know there was a Chinese copper producer who came in as an 8% shareholder some time ago. So when you have these incredible large discoveries, it's not about the quality of the management. It's not even about the country and the location. It's just about who will eventually own this project. And when you can enter these plays at a very low valuation, there's only upside, because the size of the discovery will guarantee it will be bought out. We've had 83 buyouts since we started in 2008. And the longer we do this kind of investments, we understand we need to invest in the tier 1, tier 2 projects. They will always be bought out. And if you spread your money and your risk over 30, 40, 50 of these situations, well, 1 or 2 might fail, but not all 40 or 50.
The Gladiator, go ahead and ask your question.
Hey guys, thank you for the space. It's been really informative. Willem, we've seen some stats come out recently about with the price of gold moving up, gold juniors, gold explorers, producers haven't really moved too much with the price of gold. And a lot of that's come down to, inflation increasing the cost to actually produce. So even though the price of gold has gone up, the margins have stayed relatively the same, which kind of explain, why a lot of the gold stocks haven't moved. Can you see a scenario soon where the costs might come down and the price of gold might at least stay where it is to see some, higher margins being made by these producers, which might then flow down into the explorers?
Oh yeah, we already see that happening. Look, when the gold price is rising, let's say $100 or $150 a year, so let's say a good 10%, but inflation is another good 10%, nothing happens with your margins. But now gold has been going up 20% over a few months, and inflation is sub 10%, maybe around 5%. The margins are increasing rapidly. So when you look at gold producers who are very leveraged to the gold price, like Victoria Gold or other names, you see them move up violently. And even Newmont and Barrick, we never bought Newmont in the last 5 years, but we started to buy them when they were reaching $30 or even sub $30. Well, they're now around $40. So even the larger names are reacting to this. But we need more money coming into the space, generalist money. Generalist money will always flow to the big guys, to the big ETFs, the big producers. And then you'll see more money coming in. But if we look at the number of deals and private placements being offered to us by brokers and banks from Canada and Australia, you see there's new money coming in. There's so much deal flow ongoing. But the major markets will start to move violently higher in the next phase.
Great, Willem. Thank you.
Thank you, Gladiator. Gordon, I just activated your speaker link.
Hello.
Yeah, go ahead.
Well, my question, so your fund has such a big group of stocks in it, so I'm going to go into this specifically the large hedge funds that have short exempt status that are wrecking markets, especially for small cap stocks. And is there anything in your fund that you're going to do to try to stop this predatory cheating in effect?
Yeah, we are aware of this. Of course, we were contacted as well with this information. But as soon as I saw this activist program to stop the shorting, I knew it was a sign of the bottom of the market. This happens at the bottom of the market. So it told me this whole problem of shorting would soon be over, because once you get in a bull market, the shorts want to cover. So I never spent our time and energy to participate in this in this group, this activist group. But I do like to support them, but I'm not willing to spend my time and energy on it, because I need to spend my time and energy to work on the best portfolio for our fund, for our investors.
Thank you.
All right. I'll throw you one more. The Yukon. We saw Newmont basically say they're leaving. They're going to sell coffee. They're going to put it up, for bidding. Yet we have companies like Fireweed doing very good work, Banyan doing very good work, Snowline, making a spectacular, new find. Could be 10 million ounces. Nice ore body. How do you see things playing out there? Like, who buys coffee? Who buys Snowline? How do you see things panning out in the Yukon?
The Yukon has a great future, especially for mining. But there's one big problem. The Yukon doesn't have a well-developed electricity grid, power grid. They're not connected to the BC, British Columbian power grid. They don't have enough power for any serious new mines. So this problem needs to be solved first. It could be solved with small modular nuclear reactors. It could be solved by connecting the Yukon grid with the BC grid, but that will take years. It will take billions. It will take some political help and assistance and planning. And I think that's why the majors are hesitant to enter place, especially look the majors like Newman. They want to operate tier 1 and tier 2 mines. And why did Newman buy Newcrest? Because they could choose to keep the tier 1 deposits and sell all the tier 2 and tier 3 deposits. And I understand that strategy. And if I was asked to be the CEO of a company like that, I would have exactly the same strategy, because it takes almost the same effort to plan and develop a large mine compared to plan and develop a medium-sized mine. But a medium-sized mine has much larger risks than a very large mine, which has a mine life of 50, 60, 70 years. So we are very active in the Yukon, but we invest in the best discoveries out there. You forgot to mention Sitka Gold, which is only, I think, valued at 40 or 50 million, and which is working on a great discovery as well. And then we ride the speculative discovery phase, and then we sell most of our position after they reached 1 billion or maybe 2 billion if it's a world-class discovery. And then we go to the next discovery. But we are very hesitant. We got offered a private placement for Western Copper, which is a Yukon project, as you know. And we declined that private placement because they're in this difficult phase in the La Sonde curve where the discovery phase is over, and then you need to try to develop it. And you need a lot of money, a lot of time. And we like to play the discovery phase and the revaluation phase when the production is getting started. And these are the only two phases we are interested in.
And what you just mentioned, they got a lot of copper there. A lot
Oh
of
yeah,
copper.
oh yeah. It will be developed one day, but there's no energy. Same for
Yeah.
fireweed zinc. I wish you luck. Maybe it will be developed because of Maktoon, because of that tungsten project. Because we need to, or the US says we need to
Exactly.
be independent of China, but it won't
Exactly.
be developed for the zinc, not anytime soon.
The bull case there is the tungsten gets the government grants,
Yeah,
and that builds all the infrastructure for Mac Pass because they're neighboring projects.
and then Snowline might benefit as well because they are on track to that part of the Yukon.
Yeah. So if fireweed can land government billions for the tungsten deposit, the highest grade one in the Americas, then it's game on there.
But
Thank you so much.
let's wait for that. Let's wait for that press release, and then we
Yeah,
might
let's wait
enter
for
it in a big way. Yeah,
let's wait till
yeah, yeah,
the contract is signed and the ink is dry. Thank you so
yeah.
much for your time. This was a fantastic conversation. I'm very grateful. Thank you all for tuning in, and I look forward to doing it again in a couple of months. Cheers.
Always a pleasure. Thank you.
Thank you.